So welcome to my YouTube channel, the Belinda Uju TV, where the fire of purpose ignites the power of law. And today we're in class, actual class. There's a lot, like I said yesterday, there have been a lot of conversations online. People are making videos trying to enlighten everyone on what the new tax reforms are or will be from January 2026. And the conversation is just a lot. But I want to simplify it today, and that's why I called this class Tax 101. So picture yourself in class and take notes where necessary, because we all will definitely be needing this explanation as we progress as a people and as we progress as a nation. So the first thing is, what is tax? What is tax? This tax that we're talking about, what is it? Many people feel like it is just government being mean, it's government's way of punishing people, and all the other unpleasant stories we have. But that's not why we're here today. The first thing is, what is tax? Tax is a compulsory financial contribution imposed by law through government on individuals and businesses to raise money for public purposes. I'll take that one more time. Tax is a compulsory financial contribution imposed by law through the government on individuals and businesses to raise money for public purposes. So tax is not optional, it is not a donation, it is a compulsory financial contribution. So we have that, right? Having defined what tax is, the next thing for us to do, and cleaning off, so you can see there are a lot of stains on the board, so I'm actually cleaning off as we progress. The next thing is, what are the taxes that we have, the types of taxes? And I'm going to be writing them out. So number one, first of all, I will need to say this. In Nigeria, our taxes can be or have been categorized under three broad umbrellas, and I'll write them out quickly. So we have tax based, please permit my writing, on income. We have tax based on consumption. And then we have tax based on capital gains. Tax based on income, tax based on consumption, tax based on capital gains. But because of time, and because we need to simplify this as much as we can, today we are going to start off with tax based on income. In the coming lessons, we'll be dealing with tax based on consumption and tax based on capital gains. So I will clean up these ones, and then we will look holistically at tax based on income. Here we have very popular examples. I'll be using the most used. So here we have personal income tax. PIT. Then we have pay as you earn. Payee. Then we have company income tax. CIT. And then D, we have withholding tax. I'm sure some of us see all of these things in some of our payments and things that we services, and we're just like, what is this? Withholding tax. WHT. So take a minute to take a screenshot or take notes. Tax based on income, we have personal income tax, pay as you earn payee, company income tax, and withholding tax. So we will start with the first one. And as is the practice, I'll clean up the remaining ones. So we'll start with personal income tax today. And I'm not sure how far we can go with that, but I will do the best I can. So who are the people who fall into this category? Who pays personal income tax? Firstly, what does it mean? This means tax charged or deducted from your earnings. So here, individuals fall in, businesses owned by individuals. So all the self-employed people that have business names, this is where you come. Professionals or lawyers or auditors or as you have your Emeka Ezofo and Sons or Belinda Ezofo and Co. This is where we fall in. Personal income tax as well as individual. So content creators, everybody, this is where we fall. Most people fall here, right? So what law governs this personal income tax is called Personal Income Tax Act. So you just add A here. Peter, Personal Income Tax Act. That's the law that governs this. Who collects this tax? In most cases, it is the State Inland Revenue Service, SIRS. State Inland Revenue Service, except for people in the armed forces and people living in Abuja. In those cases, there are some exceptions. Armed forces, the police, those ones are paid to the Federal Inland Revenue Service, and people living in Abuja. So if you're in Abuja, you are paying to the FIRS. Why? Because Abuja really is not categorized as a state. It functions under the umbrella of the federal government, so you pay to the FIRS. Yeah? Now let's take the next thing on this. So this personal income tax, what's the percentage? How much of it are you supposed to pay? This one is not fixed. So that I am Belinda and the founder of, or the principal partner in my law firm, for example, it's not the same tax I'm going to my staff, for example, or my cleaner is going to pay. But we'll get to that. This, the government considers to be paid based on capacity and to give some form of equity for everyone. So after all deductions, allowable deductions, I must state, it ranges between 7% to 24%. 7% to 24%. But I'm trying to simplify this as much as possible. But remember, this is not fixed. It is based on capacity. But before we now even go to this percentage, I need to state that I've been seeing comments and videos where people say, if you are a small business or if you are a small earner, you will not be taxed. Now, while that is maybe true in practice, it is not correct in principle. Everyone will be taxed. However, the government considers all of us before you are taxed. So there are certain reliefs. We have a relief called Consolidated Relief Allowance. Please permit my writing. CRA. So in the course of this lecture, I will just be calling it CRA. So we have CRA. This is a sort of relief provided by the government, considering its citizens, knowing that the citizens need money. So it's not your entire earning that is taxed. It is a part of your earning that is taxed. Let me explain. So if I earn 1 million naira in a year, all of my earnings is 1 million naira, the government will not tax me on 1 million naira because of this consolidated relief allowance. So what will the government tax me on? That's your next question for me, right? And I'm here to answer you. So Remember CRA, it is government's relief allowance to us. So I'll be saying CRA in the course of this explanation. What is the consolidated relief allowance given to everyone in this category? So the government has looked and said, okay, you know what? Let's cushion the effect of taxation on the people. Let's not tax their entire money. So if you're an employee and your entire salary for the year is, let's say, 2 million naira, or any amount it is, even if it's 500,000 naira for the whole year, what the government is saying is that we will give space for 200,000 naira or 1% of your gross salary, of your gross income. Whichever is greater between these two. I'll explain, don't worry. Whichever is greater. Please permit my writing, yeah? It's the board and the speed I'm trying to write at. Then, so A, 200,000 naira or 1% of your gross income, whichever is greater. Then B, 20%. So I will explain. Now, the government is saying, oh, if you earn 1 million in a year, that's your whole earnings in a year, we would not tax you on the entire 1 million like I stated. If 200,000 or 1%, whichever is greater, of your gross income, whichever is greater. So what this means is, in 1 million, in the case of my 1 million, 200,000 is greater than 1% of 1 million. 1% of 1 million will be 10,000 naira, right? So in this case, 200,000 is greater. So we are going to work with 200,000. So we'll set aside this 200,000 somewhere here. That's one. Then 20%. What is 20%? 20% is of 1 million naira, which is what we are working with, would be 20,000 naira. I'm a lawyer, so you will permit my mathematics. Yeah? So when you add this, it will be, sorry, 20% will be 200,000 naira. You see why I said my mathematics is not good. So 20% will be 200,000 naira. 20% of 1 million. 10% of 1 million is 100,000. So 20% will be 200,000 naira. So 200,000 naira plus 200,000 naira. Remember, government has given you a relief of 200,000 naira. So that would be 400,000 naira. So from your 1 million, you already have a relief of 400,000. So what is left will be 600,000. And it is this 600,000 that you will be taxed on. Do you get that? I have used 1 million as an example. You have 200,000 already as relief from government. You also have 20% as relief from government. You add this initial 200,000 to the 20% from government. In the case of 1 million that we have used, you have 400,000. Then you deduct it from your total earnings for the year, and you have 600,000. In the case of 1 million, so what you are left with is 600,000. This is where the tax will apply. This video has become really long, but before we cut short or before we end for this session, I'm just going to run us through. Let's say your earnings for the year is about 30 million. How does that apply? So we have used 1 million. So now let's use 30 million. So if 30 million, the government will now look, okay, somebody that is earning 1 million, they work with 200,000, right? Somebody that is earning 30 million, it's not the same. So here, the government will work with 1% of 30 million. What is 1% of 30 million? That's 300,000 naira. So remember that here it is 200,000 or 1% of your gross income, whichever is greater. In this case, 300,000 is greater than 200,000. So the government will apply 1% of your gross income. Then there's also 20% for you. And 20% of 300,000, 10% is 3 million, so 20% will be 6 million. All the mathematicians in the household, so 6 million, right? You will now add this 6 million to your 300,000, that will be 6.3. I don't know if you can still see me. I doubt that you're still seeing what I'm writing. So you will now have 6.3 million. Remember, 20% of 30 million, which is what we are using now, is 6 million, and then 1% of 30 million is 300,000. So we have 6.3 million. How much is left from your 30 million? If that's what you earn, you have 23 million 700,000. Now this is what you'll be taxed on. So let's bring it down. Let's bring it home as we go down, as we round off. Note again, in summary, you are not being taxed on your entire earnings. Government has given you consolidated relief allowance. Here you have either 200,000 or 1% of your gross income, whichever one is greater, depending on how much you earn. So every time you want to calculate it, go and check. My gross income, is it 5 million? Is 5 million, what is 1% of 5 million? 1% of 5 million will be 50,000 naira. So you still fall under, you will use 200,000 naira. So as long as your 1% is less than 200,000 or 200,000, you will use 200,000. But once it is greater, you would use 1% of your gross income. Then of course, 20%. That 20% is no matter how much you are earning, you will add your 20% to either this 200,000 or 1% of your gross income. When you add that, you subtract it from that, your total, which we have just done, and then you will know exactly how much will be taxed. See you in the next video as we further expand and expound on other taxes, their compliance, and how they apply.